Hello, and thanks for joining us today. I'm super excited you can be here. Look, today we're talking about one of my absolute favorite topics. It's in the name of the show, credit. We're talking about consumer credit. We're talking about a world of what you need to do to be building credit, to be able to watching and improving credit. And how does this really tie in with what's happening with technology right now? How does it tie in with AI and all the things that are happening in Silicon Valley and beyond? Well, I mean, we've got the guy that's on the forefront of the industry, designing technology that's helping and growing in this space. And you're going to hear from him right now. So with us today is Reza Rahman. Now, Reza is actually the co-founder and president of Ava, a fintech company focused on transforming how people build and manage credit. So actually, after spending years in Silicon Valley scaling technology companies, he actually shifted his focus to consumer finance, driven by his belief that the current credit system is not designed to serve everyday people. So he's a first-generation immigrant. He actually built his credit from scratch while navigating student debt and challenges of securing financing. And through that experience, he saw firsthand how complex and unforgiving the current system is, and especially for those without having access to the right knowledge and the right tools. So he actually founded Ava in 2020 to help solve that problem and create a more transparent and consumer-friendly approach to credit building. And today, the platform has helped hundreds of thousands of users improve their credit profiles, also reduce interest costs, and build stronger financial foundations. Now, his credit building app raised over $15 million last year alone, and demand continues to grow. His work focuses on helping individuals and entrepreneurs take control of their credit, improve their overall funding readiness, and use financial tools to create real leverage and long-term opportunity. Thanks for joining me today.
Great to be here. Ty.
So let me ask you this. How did you get into this? Like, give me a history, because I've been in the credit industry for decades, and most people have an interesting story of how they end up getting into the consumer credit space.
Yeah. Look, as you mentioned, I'm a first generation immigrant in the United States. Went to school, went to college, came out with a great job. My parents always told me to be financially responsible. And I came out of school, college, thinking, all right, I've got a great job. Let's go forward with my life. And I go to rent an apartment, and the manager basically says, you don't have credit, so can't give this apartment to you. I'm like, well, I have a job letter. Like, I make money. I had to get my dad's friend to co-sign that apartment with me. So that was my first introduction to how the credit system exists in this country, and how sometimes it doesn't make sense. That was just my first introduction to it. And then I went into business school, came out, worked in some great companies, focused on technology. And then I moved to Silicon Valley. That's where a lot of people who are interested in tech go. And I worked in various startups like Gusto, that helps small businesses, with their payroll and healthcare insurance. And then I also worked at Stripe, one of the fastest growing fintech companies in the world. Fantastic company. Got some great experience and made a lot of friends. And one of them was my neighbor who worked at Credit Karma. And he was in the product team, and our CTO, by the way, was an engineering team. And, we always often came back to everything is getting better, but why is finance getting worse? Like, nobody's ever said, I can't wait to go into my Chase Bank branch and deposit some money, get a credit card, or do things that I need to do. And so we always had this back in mind of all the things that are getting better, from cars to apps to entertainment. Finance was an area that was just stuck in the past. And I worked in fintech at Stripe. My co-founders working at Credit Karma. And we were like, look, this thing is begging for something to be built in the right way. And the part that to us was the most evident was finance was full of a lot of landmines that could take you the wrong way and mess up your finances. I'll give you one example. My co-founder missed a payment on his car loan. And that was because they just made a mistake on pulling his funds from his bank account, and his credit score dropped. And he was about to apply for a mortgage. And that was very stressful. And there's so many of these, it's death by 1,000 paper cuts. So our goal was we want to solve this problem. And this problem ought to be solved because these problems lead to ruining or hurting people's financial lives in ways they don't have to. The credit score being one of them. It's a black box. People don't know how to optimize it. People don't know what they should do. If you ask the average person what your credit utilization is, I don't think they'd be able to tell you. Why not? It is so important for your credit score, and your credit score is so important for any loan or mortgage or car loan that you get or a credit card that you get. Why don't we know that? And why is it so hard to manage? Um, Other things like when should you make a payment? My co-founders were at Credit Karma. They know you should make your payment right before this due date so that you actually have a better chance of having a higher score if you just do that one small thing. But most people don't know that. So our vision, was really to build a financial operating system for every American so that they live better, have less stress, and have more purchasing power. And we were convinced, and we had this conviction that credit is where the biggest problem lay, and we wanted to address that, help people get to the best credit score possible, help them automatically as seamlessly as possible, um, reduce the cost of debt, and increase their buying power and live better. So that's how we got started. That was our mission and vision, and we saw the problem, and the problem is massive. I'll just lay one last, statistic with you. About 2/3 of Americans live paycheck to paycheck, and most of them are drowning in debt, just drowning in debt, and it's only getting worse. And today, we are investing in space technology and self-driving cars, but this fundamental problem is not getting addressed, and that's our mission.
I love it. Love your mission and love your vision. I think consumer credit and the people don't understand how big of a deal it is. Like if you just look at a mortgage payment between good credit and bad credit or a car loan payment, I mean, sometimes it's 30% or significantly higher off of what it is just because somebody has credit issues. So when you guys, you're tackling a big problem. When you look at Ava and what you've built and what you're building, what did you decide that is the intricate part of the problem that you need to fix the most? Like what part of that problem are you guys are taking on and tackling?
Yeah, and it comes from a very simple premise, Ty. It's that people actually don't need more education; they need more automation. By that I mean is we don't have to keep trying to educate people, do this or do that. Here's how the thing works. It doesn't move the needle as much as basically saying, look, it's a black box. And here's the technology, the software that can look into all the data that you have in your bank account and in your credit report and financial accounts, and basically find a way for you to get to the best credit score possible using multiple features. I'll give you one example. We built a filter called rent and utility reporting with one click. So as soon as you connect your bank account, we actually pull all your utility bills, rental history, up to 24 months, going back, and we send it to the credit bureaus and tell them, hey, this person actually has data that will help you determine whether they are high risk or low risk. But the average person doesn't know how to do that. How would they even do that? Right? So we're building the tools that enable people to report and actually showcase their true credit worthiness. We give them a credit card and we actually walk them through and put limits on and help them put limits on how to spend the money and try to keep the utilization low. Why? Because the credit utilization is one of the biggest factors in determining your credit score, and you know that, Ty. So we are building these features, and we build these features for people to take a black box and basically decode it for them and do the work for them and give them peace of mind. I think that's really what it comes down to. For the longest time, these tools haven't existed, and people were all, just floating and trying to figure things out on the fly. And most of the time, they got it wrong. And it's the way the system is designed, sometimes it's not humanly possible, right, to solve these problems just by yourself.
Some really big things that you're helping with there. So you can take somebody's utilities, for example, and you can report those to the reporting agencies. Can you do that for all of their utilities?
Yes.
And then do each one of those, will the bureaus actually report that as a trade line on their report?
They do. So we have a agreement with TransUnion, and we send it to TransUnion, and TransUnion accepts those. It's user verified. So we have a specific, agreement with TransUnion that we will get that verified, determine that's a true actual utility bill, and show them proof through their bank accounts that's connected via Plaid, and we send it over to them immediately. All the user has to do is connect to Plaid and click consent. Yes, send that data over because they're doing the hard work. They are paying their phone bill every month, right? They are paying their rent every month. Why shouldn't get credit for that?
So then, how many utilities can you do that with? Can you do it with like electric, gas, water? Can you do it with like 3, 4, 5 different utilities?
Electric, gas, and your phone bill.
Wow. So electric, gas, phone. You can
Electric,
take
gas, water, and your phone bill. Yes.
electric,
All of them.
gas, water, phone. You can take those user pays and take their how far of a past history would
24
you have?
months. 24 months.
34?
24.
24.
24 months.
So they'll take a 2-year past history. Then do they continue to report it forward? Like if I give them my
Yeah, they
electric bill
do.
the last 2 years, then they continue to
Yes.
report it forward
As
too.
long as you're subscribed to our app, we will do that automatically for you every month.
Wow, that's crazy. That's like
Yeah.
ridiculous because the
Yeah.
people who have credit issues, like the hardest part they have is they can't get positive accounts on there. And that's why a lot of part of the time their scores don't go up is because you can't get positive accounts. But you're talking about adding upwards of 4 accounts from what they're already paying and going
Exactly.
back to years. I'm just curious. I know you can't speak to scores and results, right? But is there anything you can say about the kind of impact you've seen adding those kind of accounts has on somebody's credit profile?
Yeah, I can't share the details because there's also other factors involved in your credit,
Sure,
as you know,
sure.
right? So I don't want to, make claims that are not true. But what we have seen is when somebody collectively uses our product features and pays their other bills on time, doesn't run up their other credit cards up through the roof and increase utilization, we see anywhere between 30 to 40 point increase within the first 30 days. And the reason all that happens is because it's not that they're suddenly less risky and better people. They're always good people. They're always there. We're just showcasing their true creditworthiness that already existed. So we're not trying to put a lipstick on a pig, right? And we're not trying to make somebody who's not creditworthy more creditworthy. We're just trying to say this person was already creditworthy. It's just the system, the ecosystem could not see it. And that's been kind of like the problem is that the signals to the bureaus don't just happen automatically if you don't do something about them when it comes to rent and utility bills. So that's what the value that we provide our users is we're just showcasing your true creditworthiness. You're creditworthy, and a lot of people are. The system just doesn't see it because they're invisible often.
And this does it. TransUnion's the main bureau, like Equifax, Experian, no, but you could add the utilities to TransUnion.
So for rent utilities, we do TransUnion right now. We are working with Equifax and Experian to add them as well. But our other features like the credit building card, the secured loan, they report to all 3 credit bureaus.
Okay. And I want to talk about those two too, because, this is a really big deal. Like I think about it, people think about this as a credit building tool, right? I mean, I'm not saying that they do, but like to take somebody with challenge credit or help. But from like me, I look at it from the opposite end. Like we have a lot of people that are trying to get credit card stacking, for example, and they have a 680 and they need 700 to get there, right? But I'm thinking about that. I'm like, man, if you did that and you added 4 positive trades to somebody's account and 2 years of past history with that, I just wonder, like, that's got to jump somebody up to even qualifying for the prime kind of financing.
Absolutely.
When they're just missing the mark too.
And look at the interest rate difference between subprime and prime.
Yeah,
right?
It's significant. Yeah.
If you're about to buy a home and get a 30-year mortgage, right? Why would you sell for a 650 when you can get a 720?
Right.
It's a massive difference. And in today's interest rate environment, that's like you are just leaving tons of money on the table.
It's crazy. Yeah.
Yeah. But again, I go back to the human psychology. I don't think most people understand the system well enough.
Right.
And actually, no one's doing the math for them because I guess what the mortgage broker is not going to be like, all right, you know what? Let's do things to your credit report, increase your score, and get you a lower rate. I don't think anyone's out there doing that. The only person who cares is you, and the average consumer is just in the dark. for the most part.
Yeah, and it's really interesting because, I used to own a mortgage company, and you have a matrix, like when it comes time to determine your rate, and it is just people don't understand, like it is credit score based 100%. Like your score 680, your score 670, your score 660, and based on where you are, it determines the rate. And I mean, it could be, like within just 30 points, you could be looking at a 0.5% interest, which doesn't sound like a lot of money. But 0.5% in interest on $200,000, $400,000, $500,000 over 30 years, that's a crap load of money. Like that's a lot of money. Even in your monthly payment, it's a significant amount. So, okay. So let's talk about the other products you have. So I love the utility. That's phenomenal. That is so cool. And my brain, I'm distracted. This ADHD brain, because I'm like, wait a second, our borrowers could use that and do all kinds of things. So I'm already out there thinking about how this could work for our users. But let's talk about the card you have. So tell me a little bit more about the card that you guys offer.
Yeah. So the card, the Ava Credit Builder card, is basically says it's the name explains it. It's a credit builder card. And what we do is, we don't do the catch-22 of like, oh, we're going to look at your credit score and give you a credit card based on that. I'm like, well, then that's what defeats the purpose. What we do is we look at your cash flow in your bank accounts and determine what kind of credit limit to give you. And what we do is we put some constraints on the card. The card is you can't use a card anywhere you like. It's only on certain merchants that we allow. And the goal is to keep your utilization low. So we didn't design this as an all-purpose card that can be used anywhere and everywhere. The goal is to impact your utilization in a positive way because it is such an important factor. And the card is designed for that. Most cards are not designed for this. Do you know why? Because credit card companies make money when you spend money. You will not find credit cards that are designed to reduce utilization because if they reduce utilization, the credit card companies make less money. So we built the first card that is actually there not for you to spend a lot of money and drive utilization up, and we have 0% interest. So we are not incented to make money off of your balance. We are there to actually help it impact your credit score, and if you're responsible about it. So that's how it works. And over time, the credit limit also increases as you show good behavior. And good behavior basically means paying your bills on time, staying within certain limits. And that also is something that happens automatically. You don't have to go and come, hey, can you increase my limit? Can you help me? No, we are all there working behind the, in the back, actually helping your credit utilization. So it's almost, think of it as almost like a live product, always there trying to figure out what is the best utilization we can get you to, while at the same time giving you the ability to showcase that you're responsible. So you have to pay your bill on time, and if you don't, we have to report that to the bureaus. That's just the law, and it's entirely designed to help you showcase that you can be responsible about credit. You can make payments on time.
Low end, $300 type limit, and what's your range of limits?
So it goes anywhere. So again, it depends on the underwriting because it depends on your cash flow. It goes anywhere from $250 to $2,500, depending on So depending on the kind of bank account you connect, as well as the behavior you show over time. So I've seen people start at $250, then they've got all the way to $1,000 because they were making the payments on time. They were responsible, and we could see that, right? And that also showcased that they were responsible users of a financial product.
And underwriting is based on cash flow, not credit. There's not a hard inquiry to get the card.
No.
And then where does the card report to?
All three bureaus.
Oh, it reports to TU, Equifax, and Experian.
That's right.
$250 limit to $2,500 limits, ultimately based on cash flow, the ability to increase the limit just with normal, responsible management of the card.
That's right.
Yeah, that's significant too. It's interesting because I owned a consumer credit company back in the day and sold it a long time ago. But I can tell you that, people would come in, one of the first things we do is help them try to get new credit, right? And it was hard to do. This was a long time ago. But when we would do it, their scores would jump sometimes and this is me saying it, not you, but I mean, I've seen people score jump 60, 100 points just because we added new available credit on their report. Because that's 30% of your score. Like 30% of your entire FICO, like a third almost of your entire FICO is just utilization. The problem is people, as you know, with bad credit, like, or challenge credit, they can't get cards. They can't get them, or they're secured, which nobody wants secured cards. So then they get like these cards, they can't get limits. And then as a result of that, they can't improve that if that affects 30% of score. And then you could try to attack negative items all you want, but like you're not going to get the score up without positive credit, which you're helping them add up to 4 accounts. And then you won't get the score up if you don't add available credit, which most people with credit issues can. That's just, as you know, the vicious cycle they get.
It's a vicious cycle, and that's where people get stuck. Is that they can't get a shot at it, right? Yeah. We're just excluding them completely, and then there are all other factors, credit mix, right? If you don't have unsecured credit, if you don't have a revolving line of credit, you have your credit mix is getting affected, right? And credit, then credit history, then on-time payments. It's almost like, Ty, there's a credit escalator, and you just got to get on that escalator, and you got to be given a shot, and you have to be given a shot in a safe way that you don't make mistakes, and you're prevented. The incentive is not to get you back into debt. And something like this has just been sorely missing because the entire ecosystem wasn't built to help people climb the credit escalator, improve their lives. And by the way, banks should be like, yes, as if their credit score improves, they become more responsible. They will take more financial products. They will be more valuable users.
Yeah.
It's just something that's been ignored. And it baffles me that millions, actually tens of millions of people fall into this category. And, the financial ecosystem's like, nah, don't care.
Well, it's a money grab, I mean, you got to think about how much money these guys make on subprime, like,
overdraft fees.
Crazy. Right? 22.
It's crazy.
I saw a credit card charge 65% interest. 65.
That's predatory.
Like, it's crazy. But I mean, you got to think about, like, you charge somebody 3% or 23%. That's where they make all their money. It's like pharmaceuticals, and cancer. I was like, look, there's so much money to be made by people having bad credit that, like, it's a problem the industry doesn't want to solve. So that's why I love that, here's like you guys come along because you understand it and you're fixing all the different components. Like, anybody understands the math of FICO, you're fixing like 80% plus of like what makes FICO. So it's like in one shot, one app, you're fixing all the major components that somebody needs to boost their score.
Absolutely. And we've got, like, I'll give you another example. A feature that we've built is freezing your credit. To freeze your credit, again, there's a lot of identity theft that happens. To freeze your credit, you have to go to every single bureau and actually click on and actually go through the whole process to freeze it. I don't know if you've frozen your credit or not. It's a pain.
Yeah.
So we built a AI agent that basically goes and does it for you with one click. All three. You don't do anything. So we are every step of the way using technology to help people do the right things when it comes to their credit. And I think it's about time because for too long, this has just been a complete nightmare for the average person.
Yeah. You have a loan product too, you said, right?
Yes.
Tell me about your loan product.
The loan product is actually the simplest of all of them. It's a secured loan. So what we do is if you qualify, we put $300 into a wallet, and we have a bank sponsor for that. And we put that $300 and we leave it there. And it's your loan, but it's locked, and it's going to be unlocked after you make regular payments every month. That's $25 over 12 months. And as soon as you do that, the money gets unlocked and you have it. It's basically a way for you to show positive, consistent payment history. And also a new credit mix, right? The secure loan aspect has been there for a very long time. We just made it very simple in one app and put it together with every other credit building, credit improvement, credit optimization feature that we have. That helps actually people quite a bit.
And reports to all three?
All three credit bureaus.
Other features that you have now or rolling out with that we haven't covered?
So we have another one that's we're rolling out. I'm actually super excited about this. It is, it is we call it Ava cashback card, and what it does is traditional secured cards in the past would be like, hey, take, lock up $200 with us, right? And then you get a $200 credit limit. And then, you can't access that $200 that's locked up and you're going to spend the money and you have to pay the bill. So basically, you've locked up $200 that's as long as you use the card, you're never going to get access to it. We're like, no, actually, there's no point in doing that. And so we're building a cashback card, 1.5% cashback card. But again, most people don't get these kinds of rewards cards at these levels, and we just ask you to connect your direct deposit, and you can use that whatever you've put down as your direct deposit or whatever you've put down as part of your spend limit. So you don't have to double dip. You don't have to have money locked up. You can just use whatever funds you've put down, and every month you just pay your bill, and that gets filled up again. And you get 1.5% cash back. Plus, we're working with certain merchants such as gas stations to give you even more. Why? Because gas prices are insane, right?
Yeah.
And all of this is designed, again, positive credit history, credit limits, because the more your direct deposit is, the higher limit we can give. And then finally, over time, we add unsecured portions to that limit, which is like, hey, you know what? You don't have to put your deposit down or your direct deposit down, and we increase the limit on that as well. Take that, add it to the Ava Credit Builder card, the secured loan, the rent utility. That's like your credit on steroids.
Yeah. That's crazy.
And also at the same time, you get cash back. We are just rewarding you for doing the right thing.
So I don't usually do this because I don't want to embarrass you, but I think you guys, like, there's a misprint on your website because you left a zero off your pricing. And I didn't want to be the one to bring it up, but like,
oh, really?
Yeah. There's no way, you guys. Is this really? I mean, I don't know. I usually talk about pricing on this stuff, but your prices are ridiculously low. I mean,
no, it's again, yeah, no, it is accurate. It's right. And look, I'll tell you one thing, and this is where it's very important to start any startup or company or institution you start to have a level of empathy and compassion for the people you're trying to serve. For too long, I've talked to our members who are like, I'm paying $300 a month for a credit repair specialist who helps me do X, Y, and Z. I'm like, okay, that's great, but you know what? A lot of the products and a lot of the things you could do can be done with a lot lower cost. And I am not trying to say that you don't go to a credit repair specialist, but what I try to tell people is software is there to make software, and AI is there to help make your life easier and better. And we've got some of the best engineers that we can find in Silicon Valley solving a problem. And one of the problems is affordability. There's no reason somebody should be paying several $100s per month or even tens of dollars per month to get access to these products. We're building them because they are effective. We have a great banking partnership as well, and we are doing it so that millions and millions of people use this and get the benefit out of it.
I love what you're doing. Absolutely love it. I mean, I'm passionate about the problem that you solve. It's a serious problem, and the whole system is just against consumers who are trying to navigate out of this. And I've seen it all sides. I've tried to help them get mortgages. I've tried to help them fix the credit. Like I've been on all sides of this. So I love talking about people that are passionate about the same thing I'm passionate about. So if somebody's watching this, they want to go learn more. They want to get started with Ava. Where should they go? What should they do?
They can just go to meetava.com. MEETAVA, meetava.com, and check out all the products we have. You can just sign up. We have a mobile app. We are mobile first. So you just download the app, get started. If you have any questions, reach out to our support team. It's support@meetava.com. They're more than happy to answer any questions. And we make it very simple and easy for people to get started. The average time to get Ava onboarded, set up, going for you is less than 3 minutes. So
wow.
We make it super simple, super fast, automated, and then you just Sit back, relax, let us do the work for you.
It's awesome. I love what you've done. Thank you very much for coming on with us today.
Of course, Ty, pleasure to be here.
All right. Have a good day.
All
All right.
right.
So listen, you're watching this. You want to go to meetava.com. Meet, I mean, this is, first of all, you're just going to be able to scan right now with the QR code. If you go to Meet Ava, you're able to go and get the app. You can scan it from right there as well. And then everything you need is right on their website. I mean, you're able to see pricing, you're able to see what it works, you're able to see the features. But you don't want to spend time reading. I mean, that's going to take you too much. Just go get the app. Just go to meetava.com. Or is it available in the App Store too?
App Store, Play Store, both.
Okay, so App Store, Play Store, or go to meetava.com just right now if you're on a computer and just scan the QR code or just scan the QR code. But go and just grab it. It takes less than 3 minutes to get set up. I mean, it's ridiculously cheap. I don't like to mention prices on here because it changes all the time. You know, if you're watching this at a different point in time, it could have changed. But I can tell you it's ridiculous. Like, it's way lower than it should be. And so I would probably get it before they realize that. Raise the price because that's what they should do. And I can tell you that there's a lot of benefit here because it's not just if you have credit issues. I mean, if you have credit issues, it's just a no-brainer. Like, this is just the no-brainer stuff you should do to add a loan, to add a credit card, to add payment history for up to 4 other accounts you can have. I mean, just some of the stuff we're talking about, so no-brainer. But here's the interesting thing. Even if you have good credit, like, this could be the level between you getting a lot of kind of funding and not. Like, I think about stacking off the top of my head, and like somebody that's 20 points higher, something that's 680 versus 700 or 700 versus 720, that could be 30K in funding, like 40K in 0% funding, like every day, all day it could be. So even if you've got good credit to push you over and to push you even higher, a lot of these benefits can do that and then push you into a whole other tier of funding programs that can help you as well. So make sure you check it out at meetava.com. This is definitely a tool that you need to be able to improve consumer credit, raise your scores, and open up the door for a lot more business funding. So thanks very much for tuning in. Take care. Have a great day.